Twitter announces NFT profile pics. It's like showing your yacht in your profile picture with the receipt. If you subscribe to Twitter and pay $2.99 a month, you can put your expensive NFT in your profile.
If you wanted to know, I paid $100,000 for my profile.
But people don't go to Twitter to flex. People use Twitter to argue about politics and tell jokes. So a lot of people hate it. Looks like Instagram and Facebook are doing it too.
The blue check is cool, but do you have a CryptoPunk or not?
Will people do this? Stay tuned. Adrian, you said that you have a NFT. You're going to have an NFT on your profile pic?
My Twitter at Adrian Baschuk, I do have a Bored Ape on my profile pic. Yeah, it's just kind of a prerequisite from doing business in the industry.
And this is what's interesting about this, Alex. It's not that he bought into it necessarily. Because there's what happens with these communities, especially Bored Apes, is either you were early and you had the hindsight to hold and hold and hold and hold because you knew that what was brewing there was important. So either now you're a futurist or you're someone that bought into it. Both of those communities want to meet each other. So that's what makes it such a special community, is because when the apes get together, it's either you're really early and you have fucking insight like that and you're willing to take risks and hold on, especially when, look, again, folks that are early don't necessarily have money, right? These are folks that like got in because they're in the know and they held on. It's really tempting to take 100 ETH right now for anybody, right? And the fact is, if you still held and now you're being placed with folks that are big money that are coming in droves, and now both of those communities want to meet each other.
So Adrian, you got the subscription for Twitter Blue and you have the hexagon shape, or I
have not gotten the subscription.
Okay. You got to get it authenticated.
It's
that's like
on the blockchain, and it's on.
That's the receipt, right? That's the receipt Alex is talking about. I love that. But you have the yacht and the receipt for it too, and you're waving it around.
You're like, I bought this. I was in early.
Look, as I said, we're in the MySpace era. Remember, before MySpace, if you look at the timeline of social media, there was Friendster, and before that, there was ICQ. These are names long gone, and those built for 4 or 5 years before MySpace, which we then knew was overtaken by Facebook. So I say we're still early in that era. You've got to look at the next 10 years, the next 12 years, as these are 3 cycles of adoption and building, and we're very, very early. All this is going to change and be malleable and rotate between these companies and projects, but the important key factor is the fact that you're on a blockchain, you're trading and using these assets via crypto, and users and individuals can monetize and use these assets for their own benefit and the greater good. I'm all about the greater good. This is instead of single companies and shareholders and whatnot, which are all well and great and more power to them. But this is democratizing on that third level of monetizing these technologies to then use in a more democratizing way, I think, ideally in its ideal sense.
And so this is Twitter's first jump integrating into crypto. Facebook, Instagram, there's reports saying that they're going to launch an NFT marketplace. What are these big social media platforms? What role are they going to play?
I can tell you that every major company has talked to first movers like us at Ethernity in terms of NFT marketplace collaboration and integration. They don't necessarily want to go out there and build their own and do all the smart contracts for it, because I can tell you almost 3/4 of every major NFT marketplace on launch with tons of traffic has crashed. It's just like a badge of honor. It's cost of doing business at this point. When we launched our first NFT and we did it in collaboration with OpenSea, we crashed OpenSea twice, for example, because the inbound traffic was so high.
So OpenSea is like eBay for NFTs.
Exactly. OpenSea is the big catch-all where anyone can mint and create an NFT. And then after that, you have more curated NFT sites like Nifty Gateway, Maker's Place, Rareable, and Super Rare. And then under that, you have niche sites like us, like Ethernity. Some of these have tokens, others do not. We have a token, for example, so it allows the users to participate in the token economy via NFTs, and others are just an NFT marketplace, and you go on and you buy NFTs. The jury's out as to what's going to win out in the long term and what really benefits users. Is it an autograph and a candy where people are just buying NFTs of sports stars via credit cards without a token? I don't know. Is it going to be those platforms that have a tokenized economy that allow everybody to participate in that. And again, that's just NFTs. Then you go to metaverses, et cetera.
With Facebook moving in, the biggest, the Facebook and Instagram, the biggest social media network in the world, with them moving in, and they're known to just copy people and blow their competitors out of the water, does that mean that they're going to take out OpenSea or Coinbase or other of the big marketplaces? Again,
we're so early, and you see reports of anywhere from 2 to 25% of the general public interacting with crypto or NFTs to crypto, right? Let's say crypto, in the very high numbers, 20% of the world has been exposed to crypto in some way, shape, or form, not even holding, but maybe even just opening an account, forgetting about it, whatever. 2% of people are interacting with NFTs and whatnot. The more people get involved in this, the merrier from our side on the crypto and blockchain industry side. The more masses can come in and interact with NFTs, we welcome them all, right? We're like small little startups. I mean, we're a $100 million market cap company that pales in comparison to these huge behemoths. The more people can interact with crypto and blockchain and monetize their own stuff in any way, shape, or form, we welcome them all. Absolutely, everyone's going to have a place at the table. No worries.
I think, Alex, what you were kind of alluding to is maybe consolidation. Like, what does that kind of look like? And Adrian, like, I'm wondering from your standpoint, what does the consolidation look like from, let's say, the metaverse standpoint? Because what I find is difficult, right, and a huge bottleneck to growth is that you have to decide right now whether you're going to be buying land in Sandbox or Decentraland or Meta, whatever it might be. And so it's not as if I'm using Internet Explorer or, Netscape back in the day, or now Google Chrome or whatever it might be, right? Or Safari. And the website exists across all four. The experience exists in one, right? So if I'm, let's say, Gucci or Snoop Dogg, and I create my branded experience, that only exists in one of them. So what does that fragmentation look like in your head over time?
There's a lot of talk of that, and that's why we say 2022 will be the year of interoperability and cross-chain agnostic build-out and growth. So us at Ethernity, we're partnering with Layer Zero, for example, and they're building out a cross-chain solution where users can mint to any chain that they desire. So these projects are going to have to go cross-chain interoperable so that people can go between them. There's talk of like an interoperable alliance. If you look at the Cosmos ecosystem, they're bringing in a bunch of projects like Secret and Terra Luna, for example, that they can work all together. It's going to happen that same way with metaverses, but it's okay to have a bunch of different metaverses. People are going to be able to pick and choose their destinations, and the winners will be multiple. There doesn't have to be one catch-all winner. Absolutely not.
I think one of the interesting things is just as Adrian has been kind of laying out the timeline as we expect it, is practical ways that the average person, even the average early adopter, can really start to like live and thrive here more than just kind of like buying a single NFT. What I think is going to be interesting is you have the practical side of things, and then Alex, to your question about Facebook and the big boys getting in, is it comes at a time where there's so much scrutiny on acquisitions. And, one of the ways Facebook and some of the big guys have been able to get so big is they've bought their way to domination, right? Facebook bought Instagram. Facebook bought WhatsApp. And those are just a couple of the success stories, right? Facebook acquired a whole bunch of stuff. They tried to buy Snapchat, etc. Given where we're at, given the scrutiny that Washington and others have now applying to Facebook, it puts them at a disadvantage that they can't necessarily use their wallet and the size of their bank account to acquire their way to domination here. They're going to have to effectively, it's an open, fair playing field right now. And that's not something that the Googles and the Facebooks are used to.
Well, not just that. The ethos of blockchain and crypto and NFTs is to decentralize and to democratize our universe, right? So this goes against everything that everyone's built towards, and that's what you're probably hearing a lot about in the circles that have been in this for a little while. Is there's heavy resistance on the acquisition side as well. But yes, some sort of consolidation has to happen, and it does generally in the past come in the form of investments and buyouts. Will DAOs become, essentially the decentralized autonomous organizations become your new, mega unconglomerates? I hope so. And I think that's what a lot of people are pushing for, is an understanding. Adrian mentioned there's 2% of people own an NFT right now. 2%. We're nowhere close to even the beginning, and if we could get to a place where people start understanding what DAOs are and how to connect NFT projects to DAOs and start getting excited about that stuff, which I'm seeing now and I get really geeky about, that could probably flip the script a little bit. But there needs to be a lot of education before that can happen, and quickly.
Yeah, I'm curious if a decade from now we'll look back on Facebook and a couple of these companies as the IBMs and HPs of a previous computer era.
Yeah, and IBM had a historic day yesterday, and they'll still be around, and there's room for new players at the table.
Let's also not forget that this is not the only business in town. I mean, again, a manufacturer can still manufacture goods. They don't have to think about Web3 in the same capacity. They have to think about maybe their distribution and their sales and marketing engines, but that doesn't touch their core business. I think that, Web3, you need to figure out how to play along with it.
And we are at a new time of innovation. It's a little frothy. It's a little bubbly. I can tell you, again, time the Bitcoin halving cycles, 2020, the Bitcoin halving happened. What happened? We had a huge run up, right, to a new high, crash, and then it goes stable and sideways for 2 years. And then 2024 hits and you'll see another higher high come down and sideways. But these next 2 years are the building phase. And that's where the NFTs, the metaverse, the gaming companies will all be building from now on. You've had a huge injection of capital from all the VCs, historic year for fundraising in the crypto and blockchain space. And right now, as you see the markets, we're going down, a bit sideways, and it'll go sideways. And this is the building phase in the next 2 years.
Thanks for tuning in. If you like our videos and want to support the channel, please like and subscribe. You can also subscribe to our Substack newsletter for exclusive updates and find the audio version wherever you podcast. Thanks for watching.